So it's Christmas Eve, and this is going to be a much more chilled video. Basically, with all the stuff that I discussed in my last video about, testing out new strategies and backtesting going into 2026, and with no more trading for the rest of the year, I'm going to test out. I'm going to do a bit of backtesting on TradingView first. Maybe do like a month or so. And then what I'm going to do after that is I'm going to go into FX Replay, and then we'll do some back testing there. So we have two different sets of data. And we're just going to see if this works. And see if it's a relatively profitable strategy. So the strategy is we mark out the first 15-minute candle from 8 to 8.15. The price trades above it. We're looking for price to trade back down into the midpoint, and then we place a trade off the initial movement in the direction of the initial movement here, with a 5-point stop loss and a 15-point take profit. So very simple. That's it. Mechanical, systematic, easy to do, not too much to think about. It's on the 15-minute chart as well, so it's fairly strong price action wise. And I'm interested to see how this goes. So I've already done like a couple. Two of them would have hit, one of them would have been wicked out, and the other one there was no setup. So we have four different examples of how this trade is played out here. So the first one being, slight push up, trade back into this imbalance, bounce off the middle point, straight up. Second example is we've manipulated down, yes, but then we've seen this massive market structure shift here. This is a big, big bullish candle, and prices then come back down into the entry point and moved up. This one here, a lot of chop. This was where I was trading on Monday, and as you can see, this one would have been wicked out. So I like how simple this is, I'll put this first in. So what I'm going to do for each one is I'm going to mark out which one would have hit, TP, TP. And then we're just going to go through this, just see. So yeah, it's nothing too major, this video. It's just me collecting some data for myself. And we'll just see how we get on. So again, the 8 to 8.15 candle. As you can see, no entry there. To 8.15. And I will say, what we're looking for is a move back into this midpoint at once the 9:30 volatility comes in. So again, no trade here, no setup. Just change that. OCD. We'll maybe do this for like, 35 to 50 trades just to collect some data, and then we'll have a look at the days that it works, possible news drivers. Maybe it might be a bit more difficult to do in that sense, but yeah, just going to keep this very, very standard. It's going to be very much rinse and repeat today, but what I will do is, coming up to the new year, I'm going to backtest different strategies. I've got 3 different strats that I want to try out, and with that, we can just see which one is the highest win rate which one I like the most, and we can then just look to implement that going into 2026. So we're not starting fresh going into the new year. And yeah, so you can see from here, price wakes up and then it trades down, 9:30 open, go short here. That entry is 810, so that's a nice round number that we can put this to. So stop would be 815. So this one would have been stopped out. And then 10, 15. There. So this one would have been stopped. And again, see, this isn't a great candle here. Now, here, possibly looking to go long. How would I know? Because that's, I'm going to make note of this. No Doji candle. So the entry would have been long like that. Yeah, what we're looking at here, 5.9. So 5.4. We would be looking at 10, 6.9, 7.3, like 7.4 even, something like that. Stopped out. So maybe, if the markets are trending bearish on a higher time frame, this could be something to look at. This is purely just going off no bias and just going back and seeing what we can see. So again, it could be a case of waiting for confirmation. So that is what, 895 to 890. There we go. And then 10, 15, 8, 9, 10. So again, these could all be shorts if we are in a bearish cycle. 8 to 8.15, this candle here. So you can see price moves down. We've got quite a nice candle here. Then at 9:30, we look at this. Bang. Go short here. 866. So this would be 8.6. Is that right? 8.66. So we would then be looking at 8.71. So plus 10, 5.6. Plus 5, 4.9. So there you go, that would be TP if we got in right there after the first 5-minute candle. So that's another thing to note as well. Candle confirmation note. Okay, 15. This one would be stopped out by the looks of things. So if we wait for that candle close, that is, what is that, 3.6? So we would then be looking at 2.9, around that. And then 4.6 plus 5.51. So that would be stopped out. Before then going up in the PM session instead. And again, so yeah, this is like I say, very standard video today. So again, noting the Doji candle. No, Doji candle doesn't go same way as initial move down after retrace. So we would then look for short here, which would be here. First candle, there you go. 5.1, so we'd have it at 5.6, and target 10 is 4.1 plus 5. And that. There wasn't really much of a movement here. Wouldn't really count that as a break above. I'm going to say no entry here. No entry. No clear break away. Okay. Pretty much what I'm going to do after this, I'm going to take all these notes and I'm going to condense them all into a notepad, I think, maybe. I might do that. When I go back through them, I'll get the notepad out. So where are we now? We're on 8th of December. So again, Doji candle. Now we have this, but we get the inverse fair value gap. So we could then mark that out like that. IFVG. And we can use that as a means to go long after we break above. So with that, we go long. That is 870, so we could do 865 here. Just above the inverse, target 885. TP, no IFVG, provides context for opposite direction to break. So this is what it is. It should be boring. It should be methodical. It should be very standard. Trading is not meant to be entertaining like that. You have to be very composed and calm in the markets. You know, obviously this is way easier when you have it in hindsight and you are just backtesting, obviously, compared to doing this in a live market. But having some data on this can provide more conviction. So again, this closure here from the 5 minute closes below. Would I go long here? Would I go short? Especially on the 15. Because this is a market structure shift here. So that, I'm going to say, confusing. MSS, bearish MSS, past. Dirty 5M. No entry. I mean, unless we look at this and then we go for the point where it does get hit and go here. 5.5, put that up at 60, target 4.5, so 40. No initial. So this is what I mean, spotting little bits like this, identifying where, you know, price may trick you out if you don't have this clear at the time. Well, when you trade these in live markets, it's difficult to have conviction, as I learnt on Monday, going into live markets, trying out a new strategy for the first time. No idea what it was going to do, how accurate it was, and I lost twice. So, yep, that's that one there. So where are we now? We're now 3rd of December. 858 is the Doji. And, you know, no entry here, no clear break. No entry, no clear break away. Price does come back, but outside the trading hours as well, so we'll note that. that, put that like that. And then, what else we got? Doji again. A little bit choppy here. Note the doji. So the initial move is up into here, 3-6. So we would then go 3-1. So this would be stopped out. 4-6, 5-1. So oh wait, hang on. Sorry, 3-3. And then what? 3 and 2. So we would want 2-8 actually. So even still, I think this still. Oh, I think this would still get stopped out unless we wait for the that candle. So we put that there instead. Yeah, so it would still be SL. Okay. And these are on 15-minute candles. I forgot to do that actually. Past 9:30, 15 AM. You know what? We can come back to that. We can come back to that. I'll just do it on the way back. No entry. Don't like that. It's a Thursday, very little movement here. We'll mark it out just for data sake. So 8 to 8:15. First 15 minutes. Comes back, enter that, long with the breakout. What we at? 8:11. So we would then go at 8:06. Plus 15, 826. So that would be a TP there. So you can see the different types of scenarios that are playing out here. And we can also see that price does like this setup. It's fairly straightforward. Like I'm sure you just seeing me do this, you probably know the strat by now. So yeah, like I say, very straightforward business. And I think just having something that's very straightforward like this will be helpful during my working hours when I'm at my desk, just to see, right, has price come there? Is it likely to continue? And I don't have to keep checking the charts all the time. It's just like I'm looking for this specific time from this point. and this point as an entry with a set stop and a set TP. It's very, very easy, way less stress. So again, this is a nice entry here. We got 10 o'clock candle comes here. We got what? 781. So we'll do 776, like so. 781 plus 15, 96. Whoops, that's way too many. So that would be here. Again, TP. I'm liking this. I'm like just even backtesting this now. I like the simplicity of this. I'm really liking this setup so far. So this must have been an FOMC day, Tuesday, 25th of November, which would be, let's go all the way back. Not sure why the market's moved that much that day. Strange. Okay, well, we can already see this is a goner, unless, you know, 8:30 is this one here. We go like this. Look at this. First 15 minutes we close below. So times like this, it might be a bit more difficult to call, and it would be better exercising the first 15-minute caution. But you know, we can mark this out as a short because we've got the breakdown. Price trades back up into this range at 707, so that would be 12, like so. 7, so it would be 9.2, like that. So we could either get stopped out here. So it would be the case of, you know, looking at, I'll just write it, looking at the 5-minute as well to align, as well as the 15 TP. But note that this is not after first 15 mins. Not after first 15 mins. Align the 5M with the 15M for further clarity. Okay. Where are we here? 8. So again, aligning the 5M, this would probably be a stop. $44, so it'll be 39, 3944. So this initial volatility can spike as well. So 4 plus 10, 5 4 plus 5, so we'll be looking at 5 9. TP or SL, depending on entry. Again, align 5M with. Oh, to be fair though, this wouldn't necessarily qualify as an entry due to the fact that it wasn't massively clear break. although whoops, can't type. Although no clear break, bullish MSS. Provides clarity on decision. Long, you know. So this one comes down first, yeah, fine. But I think if you're looking at this, you can see this is a bullish. You can see this is bullish price action. Higher time frame market model also taken into consideration. Market maker buy model. Okay. Big Doji candle here. Lack of clarity. This isn't, so we could say an engulfing candle. Let's say an engulfing candle, bullish, engulfing. That's what I type. Oh, engulfing. Clarity. Okay. So you don't have an engulfing candle here, but this one just looks a little more sketchy. I could say short. I like. See, this one is one that I think would be a stop. Purely because what? Price trades up. You know, you go long here. Yeah, well, this would be a stop loss here. Price trades up. Not clear break. Doji candle again. Entry here. A lot of chop. So we got what? 6.3. So that'd be 5.8. Oops. 5.870. Plus 7. 6.370 plus 7.78. Something like that. SL, no doji, and lack of clear break. Lots of chop. Uncertainty. Okay. Oof. So the 8 candle here. No entry. No entry. Why? Price trades above, signaling initial bullish bias, full break through the zone. After NYAM. So that is another thing as well. It's not within the session, so we're not trading it. Yeah. Okay. These are little things that I'm going to have to remember if I do choose to trade this model. 8 candle here. Again, wait for that 15-min close. Close above. No entry. No entry. Wait first, 15M. Full break. And closure upwards. No valid retracement. Okay. Where's the, it's about that. So I'm not sure if I switch. Time frames, it puts me all the way back. So we'll just leave it like this for now. And we'll just draw short here. So after, you know, this candle closes down, I mean, there isn't actually an entry here. There's no entry here because price does not break. So again, something to note. Tricky, but no entry. No valid break before 9:30. Just gonna take this SNES out. And again. So price does trade down here. We look at this. It'll be about putting together the higher time frame context with how the market reacts. You know, again, tricky. Wait for the first 15-minute candle. So this first 15-minute is gonna signal a lot. Do you know what I mean? So it will provide a lot more clarity. And I think waiting for the 9:45 candle to see if price does tap it again, I will miss trades taking this. But it's better to miss a trade than to hit a stop. You know what I mean? Sometimes the best trade is no trade. Wait for the 9:45 print. No entry here. Although initial bias would have been short. So we do this. Better to wait and miss a trade than be early and hit SL. Okay. Here we go. Just want to check something here. I just want to see if, because this candle would have closed here. It would have dropped all the way down. So it wouldn't have actually been the midpoint here. So this would be no entry, actually. Possibly. Break. We'll do as a short. Because, whoops. We had the break short. But again, I've got the wrong thing on. There we go. So 7.3 plus 5 is 7.8, like that. 370 plus 12 is, I'll subtract 12 even. 10, 2, that. TP, but not 9.45 print. Okay. Doji. No entry. No entry. Price doesn't retrace. So I think I'll do like 4 more of these, and then we'll go back through all of the trades that we take. We'll just count how many we took and how many we won, and we'll get a percentage from that. So this one, 8 o'clock is here. No entry. No entry. No retracement. Got one here. We get that initial break up, but that's a tricky one. This would possibly stop loss. So we got what? 15, no 18, sorry. So that would be 13, which would be a stop through chop. 18 plus 2 is 20 plus 10, 33. SL, no clear break before 9:30. Two more of these. 8 o'clock. Price does come back, but it's right at the end of the session. So we'll do no entry here. No entry. Price does come back, but in the final 15M of the session. At which point, I think if I did do this, so that'd be 790, 85. Yeah, this would be instant stop. It would be out of the time that I want to trade in. Just bump my desk there. So it wouldn't be ideal. And one more, go on. That's the 9 o'clock. That's the 8 o'clock. No entry, no retracement. No entry, no valid retracement. So, with all that in mind, we got one. Yeah, let me just zoom out a tad. 1, 2, 3, 4, 5. So do trading days. 6, 7, 8, 9, 10, 11, 12. Oops. 13, 14, 15, 16, 17, 18, 19, 20, 22, 25, 26, 27, 28, 29, 30, 1, 2. So we've got 32 trades there. No, 32 trading days. Let me get a notepad here. Notes. What's going to come up here? We're going to go new and hide. Okay, that's not ideal. Minimize that. Okay, so 8 AM, 15 AM candle method. $32 trading days tested. Trading days. Wins, losses. No. Total trades. Total non-trade. Okay. So let's run these back. 1, 2, 3, 4, 5, 6, 7. Oh shit. Oh mate. 1, 2. 3, 4. No, 3, 4, 5. 6, 7. 8. Say 7. 8. 8. So losses would be 1, 2, 3, 4, 5, 6, Apologies, this is not the best way of doing this, but yeah, this is for me anyway. So I got 6. Seven, 8, 9, 10, 10 losses. 18, 32 minus 18 minus 10 is 22 minus 8 is 12. 12. Win percentage. 44.44% win rate. Okay. Win rate 44.44%. If discipline is respected and non-trade days are accurate. What's important? Can't type. Is with circa 3 to 1 R, only need 33% win rate for profitability. Okay, so that's what we have for my initial workings across 32 days. Just gonna have a quick water break here. A little stretch. You have a stretch as well. Do what you need to do. Reset. Quick reset. Hope everyone's having a Merry Christmas, and you get to spend some lovely time with your family and enjoy yourself for the next few days. I know for a lot of people it's needed, having need to rest sometimes, but even on days like today, I was sort of just on the PS5 and I was thinking, I got to do something. I can't just sit here for the next few hours doing niche. And so here we are. So next step, we're going to write down what I want in the strategy. Put it in bold, why not? Strategy. $8 to $8.15. Mark out looking for clean break above or below 930 for initial bias. High probability. Wait for retrace into midpoint around 9:45 print. Oh, that's annoying me, the format now. Okay. Five-point stop loss on US500 and 50-point SL US100. 15 point TP on actually okay. So that's what it looks like. Fairly simple. Further indicators of bias confirmation. Don't know why it's being weird like that. Sorry about that. That's why. Okay. So, in terms of these indicators, we're now going to go back through all the trades and just look at the notes basically that I took. So we're going to go here. No note there, no note there. Where am I going? Notes. Sorry, just had one out. Okay. So this one here is more about like reading price in the moment, which I suppose when I'm actually trading, be more focused on that, what it's showing me and potential moves. Although trading outside of the New York session slash near the end of it is higher risk. That's what I'm going to put. So I'm going to take this. Whoops. Okay. And back we go. bit annoying it doesn't do the clarification. There we go. So what we'll do here is that. Clarification, is it? Come on, mate, switch on. Right. Keep going. 24th November, TP again. No clear break. What was the other one? Shit. Time frame. Buy or sell models. So just little things that I'm picking up here, you know, just so I can remember this. If I'm going into a trading session, I can look at my phone and I have all of this in front of me, and that's what I work with. TP, but not 945 print. Okay. SL, no clear break. Price does not. Price does come back, but in the final 15 minutes of the session, higher risk. No valid retracement. And that's it. So, as you can see, I'm not sure how long this video is. At the moment, I'd imagine coming up to about 30 minutes. Possibly longer, possibly shorter, who knows. I've just gone through a nice and simple backtesting session there. Over 32 trading days, 8 wins, 10 losses, 18 total trades, 12 days without trading. Win rates, and, you know, little bits of advice, what the strategy is, what win rate I need to be profitable. What I'm looking for, you know, to potentially flip my idea on the trade, or what I'm looking for to confirm what's there. Little things and reminders to stick to. These will be my rules. Not my rules, these are all my rules, but yeah. So another thing I could do is go through each of the days, mark out Monday, Tuesday, Wednesday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. I realised I didn't say Thursday before. I don't know why I didn't type those all out anyway. Tuesday. this. Maybe not like that. Okay, so what's the best way to do this? Can I do this like this? Yeah, that works. Okay, guess not. Can I lock that? I'm not sure how to lock that. View. Okay, so we got Wednesday, Tuesday, Monday there. Okay. Oh, you know what? Fuck doing it like that. Sorry. We can do this instead. It's easier. Yeah. Sorry about that. And then we got Wednesday. This was a Monday here. One. Monday. Oops. Mark that one as an SL just because it's better to mark it worse, because that'll be more reflective of actual market behaviour. SL again on a Friday. Just locked in there for a sec. Monday again. So Mondays seem to be taking the lead in most low probability. TP but not 9:45 print, and that's on a Friday. Tuesday stop. Okay, so that took a bit more time than I had anticipated it to, but looking at this, Thursdays seem to be good for delivery. Tuesdays, yeah, they're okay. I was looking at Wednesdays, right? So Tuesdays and Mondays seem to be lower probability, and Thursday seems to see. So do Monday, Tuesday. Lower probability. Exercise more caution. And then, what is it? Thursdays, Wednesdays and Thursdays seem to be higher probability. Wednesday, Thursday, higher probability. Friday, neutral. Based off limited data collected. Okay, so that's another takeaway there. So with that, we can look, more commonly on the days where we may see a trade. So Wednesdays and Thursdays, definitely higher probability from what we have. And I'm just trying to think what else this would be. So if we then look at, if we're trading 15 points per TP and 5 points per loss, we can look at the difference here. So 8 times 15, 8 times 15, 120, 15 times 8 equals 120 points. 10 times 5 equals 50, obviously. It's a nice and easy one. Let's do that. 5 equals. Why has it done that? That's not what I want. Don't know why I was doing that. 50 points. Equals. Or just trying to think if there's anything else that I would need for this for now, other than just to collect more. I will also note that traded across. Range. That's what I say, range. Trading view, just pop out to the 1 hour. Friday, 7th November to December 24th. What is it today? It's Tuesday, Wednesday. Do a little dash. Okay. So, as a quick recap, this is the 8 a.m. 15-minute candle method. 32 days, 8 wins, 10 losses, 12 no trades. That would be 70 points all S&P or 700 through the NASDAQ. That's the range there. Obviously, keep your psychology in mind. If the disciplines respecting non-trade days are accurate, then this is okay. There is room for me to get a few more wrong or, overtrade on occasion, because it is going to happen. Sometimes you will just trade too many times or when you don't need to. And if that is the case, then, only need 33% accuracy. So that's 3 out of 10. Well, 3, yeah, you know what I mean. 3.33. So we need to get like 4 out of 10, basically. You open it up, obviously 8 out of 20. Double that, 16 out of 40. Yeah, sorry, my math's a bit off. I'm a bit cooked after all that. So from here, we've got all the strategy marked out. What am I looking for? What's the TP? What's the stop loss? Further indicators, bias confirmation, and let's recap there. We now have, the days from the data that were most successful and the days that were most low probability. That's all marked out. And yeah, I think, to be honest, that's about all I really need to run through here. This is a really long video today. A bit slow at times, obviously, just because this is what it is. This is backtesting. This is what, ultimately we need to be doing if we want to be profitable. And yeah, actually setting this all out has been quite helpful. Like I say, this is just one strategy that I'm testing. I will post another video on probably FX replay for this one, just so we can do a quick simulation through it, and we can use like a different time range, and also the inverse fair value gap method that I was talking about in my other video, which I can't remember off the top of my head right now because I've just been doing this for an hour or so. But yeah, like I said, that'll be within the next few weeks, and whilst we're off for the rest of December, I'm not going to trade till 2026 now. So yeah, this is just a recoup stage, and we are putting some time into the charts to actually figure out something that is going to suit my psychology and how I trade, especially at work, at the desk. Yeah, seems a bit more simple than some of the stuff I've been doing. There's been a lot of confusion or just like inconsistency over the last month in my trading. I sort of dropped my original model to look at like a lower time frame one, just because of my psychology. I was struggling to hold through multiple trading days if needed. Like just being in the trade for that long starts to play on my mental, which obviously that is something that I need to work on, but it's better to adapt trading to my style. And I feel like, looking at this model in particular on a much lower time frame, just trading across the New York session, it's yeah, it just seems like much easier to do, much easier to manage. I think one thing that I'll need to get used to though is the higher risk. Like my stop loss is 5 points, and dealing with that amount of range in live capital may be difficult to adapt to at first, but it's something just to keep in mind as well. I might just put a note on it actually. Caution, actually, we'll say 5 point SL is may play a factor into live capital psychology. So we noted that, and that is helpful just to keep in mind. So yeah, I think I've just completely lost my train of thought there, but here's what it looks like on the hourly chart. You can see that's a good deal of notes that we've just taken and recorded. So yeah, very pleased with that. This is a nice session, and I think that's gonna just about wrap it up. So with that being said, I will catch you in a bit.